Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Fatakia. In the red now for the third consecutive session. The Nifty has breached yesterday's intraday low and is trading with cuts of close to about 78 points. So the Nifty is now at 25,125. Sensex just below that 82,000 mark, 81,900, with a cut of close to about a third of a percentage point, with the mid-cap index down nearly about 0.5%. Barring autos, where there is excitement surrounding the sales that we've seen, at least on day one of the Navratri season, very solid sales. We'll discuss that in greater detail with Sudarshan. The auto index is up, but if you remove that, all the other indices are under pressure. So it's FMCG is down close to about 1%. IT, after yesterday's cut of close to about 2.5%, has fallen another 0.7%. It started trade on the flatter side, but that didn't hold, and the IT index too is now gravitating lower. And if you pull up the frontline pack, as you can see, it's a mix of many in the FMCG consumption, bracket largely. Trend, Asian Paints, Nestle, HUL, Titan. These are stocks under pressure, but outside of that, you've also got economy-related stocks like an Ultratech Cement reeling with cuts. But that's the large cap action. Mid caps are weak too, and Hormuz is now at the big wall with all the movers and shakers of this morning.
Mid-caps are weak too, but the ones that are strong, and you take a look at the volumes there, you would wonder why are the others weak as well. Starting off with a name called Reflex Industries, and this stock is up around 17% today. It's snapped a 4-day losing streak, and this is the biggest single-day gain and volumes as well on the stock that we've seen since July of last year. We are comparing today's volumes to the 10-day average as well, just to show the increase in trading activity. But 75 lakh shares have already been traded on Reflex Industries in the first couple of hours of the trading session, compared to a 10-day average of just 2 lakh shares. Now, at this point of time, the stock has just about managed to cross its 50-day moving average of 319 rupees. So that's one barrier that is crossed for the stock. But despite this move, the stock is an underperformer this year, down 19%. But the stock had quadrupled in 2024. So some profit booking coming in for Reflex Industries this year, but today the stock doing well. KC International, of course, surging on the back of a large order win that it announced last evening. The stock is slightly off the highs of the day, was up around 7 to 8% in the earlier part of the trade, but volumes today are the highest in a month, and we have already had over 1 crore shares that have already been traded. The 10-day average is just 4.5 lakh shares, and the stock has also broken above its 200-day moving average, trading above all of the key moving averages now. But despite that, the stock is down about a quarter this year, but the fact that it had doubled last year offsets some of this fall. Now, BF Utilities is the other one. It snapped a 5-day losing streak today. It's also the biggest single-day gain and volumes since the stock has seen in a month, and 13% higher on the stock today, with 18 lakh shares being traded, and the 10-day average here is only 65,000 shares for BF Utilities. And as a result of this move, the stock has broken above all of its key moving averages, and yet another outperformer today, which has been an underperformer this year, still down 10% on a year-to-date basis, and this comes on after almost 4 years of positive returns for the stock. And lastly, Subros on the list today. The stock has moved significantly in the last 7 trading sessions, of which it has gained in 6 of them. The stock is up 21% in this 7-day period. And if you look at the 7-day period as well, this is the 5th day in a row where the stock has had more than 1 lakh shares being traded in a single day. And today's 12% move comes on the back of 8 lakh shares that have changed hands, compared to a 10-day average of just 1.5 lakh. And this is one stock that has been an outperformer this year. They're already up 80% so far in 2025, and a few more percentage points of gains would make it the best calendar year for the stock it has had since 2017, Reema.
Thank you very much for that. Defense stocks should also be on your radar today. In fact, they're up and about. This is after the Defense Secretary Rajesh Kumar Singh told Network 18 that the government will soon invite proposals for medium-altitude, long-endurance drone contracts worth 30,000 crore rupees. He also said that the government is looking to double down on indigenization and will spend at least 75% of its defense capex within India. Listen in.
If you're looking at it in value terms, I think you can expect in capex terms somewhere between $25 to $30 billion minimum per year over the next decade, maybe a little more, I would say, rather than less. Our current plans are that at least 75% of our capex will be spent within the country. That's our normative target. Last year, we actually did 88% of our capex within the country. Last year, for the first time, we exhausted our budget. I think it is challenging to spend money in the Indian context, given the very elongated fail-safe type of procedures that we follow in terms of collegiate decision-making, approvals at the highest level, involving a lot of interministerial consultations. Last year we did it, and I'm sure this year also we'll do it. Really depends on how many contracts you end up signing. And last year we did a record number. This year we've already hit 3/4 of that, 150,000 crores worth of contracts we've already signed, or are in the process of signing if you include the LCA program. So we are confident we can do at least 2 lakh plus crores this year.
Excuse me. Sorry for that. We'll slip into a break on that note. On the other side, we'll focus on the crypto market with Sigma Capital's Vineet Budki. Stay tuned.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Joining us on the Crypto Corner now is Vineet Budki from Sigma. Vineet, hi, thank you so much for joining in. And the way we're looking at the markets, it really seems to be behaving like any other asset class. After the US Fed meeting is done and we have expected result in hand, there is some profit taking that we've seen across cryptos as well, as has been the case with some other asset classes. How would you read cryptos? Is it like any other asset class? Is it a safe haven, the kind of buoyancy that we've seen in cryptos in this year? What is your reading into it?
So my reading on it mostly is, when we buy a house, we don't go to a realtor every day to look at prices. But in crypto, a single day of 5% drop and suddenly everyone thinks it's all changed. I don't think we should look at daily prices on over a 4-year period. It's just like investing in a Web2 startup. You have to look at it over a 8-year or a 10-year period. But when it comes to crypto, I think more than price speculation, it is all about understanding what cryptos represent. Today, 95% of people don't understand what a Bitcoin or what a Ethereum represents. And I would say we should talk more about it, where, we should understand that Bitcoin is a store of value like gold or any of these assets like house, while Ethereum and Solanas of the world are companies which are trying to change the way we interact and transact. These are startups which we are investing in. And then you have the stable coins, which basically are a way people save money. In India, if you remember as kids, whenever we made ₹1 lakh, mom, dad would say always put it on FD so that you can save yourself against inflation. But today with the currency depreciating, stable coins become interesting. And then, you have the meme coins, the Wolf of Wall Street, penny stocks that Jordan Belfort ran. Again, people don't understand these 4 categories and just look at price. They think it's a magic coin. These ups and downs happen. If you look at the last 10 years, September and August and September have been negative months, and the next 2 months have been big green months. But again, look at utility and not just price action, because price always doesn't reflect value.
All right. Vineet, when you look at the longer term as well, and we look at volatility, which really seems to be maturing at this point in time, there are better understandings of the market. Actually, our latest data also shows that nearly 180 public companies are now invested in some sense in case of cryptos as well. How are you looking at the institutional adoption side of this?
Again, I have had this discussion with a lot of people globally, in the US specifically, where they say institutional adoption will make this market more mature. But when we look at numbers, as of today, the whole stock market is in this whole stock market, which means New York Stock Exchange and Bombay Stock Exchange. There's a small company known as Google, which is worth $4 trillion. And the whole crypto market is $4 trillion market. So, it's actually not even matured. When you look at these institutional buys, it's only 4% or 5% when it comes to treasury companies that hold Bitcoin stocks. So I think it's still very early in this whole space. We haven't seen real mass adoption, and this volatility will continue. When people say every 4 years, so if you look at the cycle in the last 10 years, You had a 80% drop on the first cycle. You had a 76 and a 74% drop between a December of this year and a January 13 months later. So I think institutional adoption has come, but has it come to that scale where volatility will go away? I don't think so. We will definitely have a 150K, 200 Bitcoin. We will have $1 million Bitcoin over the next 10 years, but we will also have a 60 to 70% correction in the coming 2 years.
All right. That is having head on your shoulders there. Vineet, also, this is also an ongoing conversation on how much of crypto should you have on your portfolio. What is your advice to people who already are invested and then people who want to start into this? Is it too late? Is it the right time? What would you say to them?
Again, as I said, I was telling you about the numbers about, stock markets being so big and, Apple being one of the companies at 4 trillion and the whole crypto is 4 trillion. It's so early in this segment. And even when you look at adoption numbers, Crypto.com came up with a report that there are 500 million wallets. If I assume one wallet is one person, that is less than 5% of the world population. This has not even started. And these 500 million wallets are the ones, 90% of these guys wake up in the morning to see Bitcoin price. They do not understand the real utility of crypto. They have not used Bitcoin to store any value. They have not used USDT to actually earn a 5% yield. So I think it's too early, but the real thing is about finding the real value. You cannot just end up investing in Shiba Inus and Doges, but you need to find the Teslas and the, Googles of the world. So it's very early. I started 5 years back. I had a great run, and I think still too early.
I get your point there. Well, a lot of people that I have been talking to also say that these are still infancy years when you talk about the crypto as a segment here. Having said that, I do get your point that a lot of people do not understand the use cases, but there are some who do, and that perhaps is a very, very niche crowd right now. What is your sense on how much for people who want to start right now? Let's agree to the fact that it would be a starting somewhere, and somewhere means starting investing to it, starting getting a feel of it, and then looking at technology and various miracles that it can perhaps perform. But for people who are just starting into this, what would you advise to them?
So what I would advise to people is rather than looking at green and red candles, start understanding the utility what these tokens get. So, when I talk about, say, ICICI Bank today has $60 billion in deposit and is worth a $120 billion market cap company. Now, when you look at Aave, which is again a bank on smart contract, it has close to $70 billion of deposits, and it's valued at $2 billion, like 1/60th probably of the price of ICICI. So the point is about understanding what utility it brings. We all know about Aadhaar card and how the government took biometrics and made it an Aadhaar card which is connected to a bank account to verify identity. But we don't know about WorldCoin, which has been built by Sam Altman, the father of AI currently, and it is doing the same identity solution. So what I'm explaining to people is that you need to first understand what these things do and what is the final adoption parameter of it, and then invest in it and not just randomly take advice on YouTube channels and buy tokens. So I would say learn more, get to meet a lot more founders, go to events globally, because we are very early. We are in the 1980s of Indian stock market where people clearly don't understand what a token represents. We would have our scams of Harshad Mehta and Ketan Parekh that would come along, but we would have people like Dhirubhai Ambani who actually build up reliances, because these are the founders that one should back it up. So I would say go out, meet more people, understand this industry more, and understand utility and adoption.
Vineet Budki, really pleasure having you on the show here. Hope we speak again. And that, of course, is how you should be looking at crypto as an asset class. Early days, and this is perhaps one of the best times you should get into this crypto as an asset class as well. But with that, it's time for a short break. We'll get you more on the markets on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Slipped below 25,100 briefly is the Nifty, making a new intraday low now of 25,084. So just over 100 points lower now on the index at the lowest point of the day. Some flashes on your screen for Ola Electric launching its Celebrates India campaign, and some prices also disclosed by the company introducing the Muhurat Mahotsav with the electric vehicles now starting at 49,999. So announcements there from Ola Electric on the occasion of the ongoing festive season. The auto companies reporting numbers as well. But with the markets having slipped to the lows of the day, it's a good time to get in the latest trends from the F&O space. And Sudarshan is joining us from the F&O desk for just that. Sudarshan.
So overall, it's turning out to be a very weak day of trading session. if you leave out the auto index, all the sectoral indices are trading with cuts. And just now we have seen that Nifty is breaching below the level of 25,100. And now the support comes around 24,900. And if Nifty market has to move higher, Nifty, IT and Nifty Bank have to provide support. But IT is continuing to see weakness after yesterday's fall. Today also we are seeing that it has extended the losses. But one positive part, if you can just say, that is the put-call ratio. Now it has slipped below 0.70. So normally in the range of 0.60 to 0.70, that level, that in that range, we start seeing the short covering. But we'll have to see for that. If you take a look at the options data, there is a huge call writing that we are seeing at the level of around 25,200 also, 25,300 also. So at 25,200, if you just take a look at the premium is now fallen to 15 from the level of 71. But in contrary, for the put option, premium has seen a rise. For 25,100, premium has increased to 22 from the level of 16. So support for Nifty, 24,900. Resistance would be the recent high, basically yesterday's high of 25,330. As far as Nifty Bank is concerned, support would be 55,100 now, and resistance is now 55,500. Two stocks that I have taken. One is Emphasis. All the IT stocks are seeing fresh shorts, but the maximum fresh shorts are being seen in the name of Emphasis. And all the auto stocks are higher, but one stock that is outperforming the most is Maruti, after the company has released the number of the first day of Navratri, and on the back of that, it's seeing fresh longs.
Thank you very much for that. Helpful as always. Get into a break. On the other side, we'll turn our attention to not banking from the traditional financial space, but investment banking. So on the other side, JP Morgan's Paul Urain will join in to talk about the top M&A deals, the PE promoter exits, and what the activity has been and what the outlook is. Stay tuned for that discussion. Welcome back. Now, the 25,100 mark has been breached in the Nifty, extended the fall to 100 points on the Nifty. And this, remember, marks the third consecutive day of a fall. But, you know, in the morning when we were discussing the auto numbers and the stellar numbers on day one in terms of sales by Maruti and Hyundai, Sudarshan had joined in and he had asked, like, how is the Josh, right? And the Josh is still going very strong in the autos. In fact, that is our big story, our top story. He's joining in with the numbers. So, Sudarshan, first, take it away.
So at least for the first day of Navratri, I say Josh is high.
Josh is high, yeah.
And that's what the comments that we are getting from all the major names, you name it, Mahindra and Maruti, Hyundai, Tata Motors, all the companies have reported the numbers of the first day. And Maruti is saying that the inquiries that it has received, it has like never seen before in the last 35 years. On the very first day of Navratri, it has recorded 80,000 inquiry, and company has delivered more than 25,000 cars. And now it's saying that very soon it's going to deliver almost 30,000 cars. Remember, 18th of September, company had announced GST cut pass on and also had provided additional discounts. Since that time, it has been receiving inquiries of around 75,000 and with 15,000 bookings every day. And that is almost 50% higher that company gets on the normal days. Similar trend is seen in the Hyundai company, saying that it has recorded around 11,000 dealer billings on the first day of Navratri. That's the single day highest that company has seen in last 5 years. Even Tata Motors has come out with the numbers. It has said on the first day, it has done delivery of around 10,000 with the inquiry crossing more than 25,000.
Indeed. Now, that is the first of the data that was reported with Tata Motors, Hyundai, and for Maruti as well. But, you know, the commentary from Maruti was pretty intriguing about the fact that it is the best Navratri that you've seen in 35 years. Now, the entry-level segment has been the big talking point. You know, Sudarshan, SUVs have done fairly okay, as M&M and the likes. But has that entry-level segment, which has been under pressure over the last few years, been their underperformer, has that seen an uptick?
It has. At least like that's what we are getting to know from what exactly the company is saying. If you remember in the last few quarterly earnings, every time we used to talk to Mr. Bhargava, he used to say that there is a problem in the entry-level segment, and for the last 5 to 6 years, this segment has been under pressure. But now company is saying that even for this segment, the booking has been 50% higher than it used to get on the normal days. And remember, the day company had announced discounts and GST pass on, one segment that it had provided additional discount, that is the entry-level segment, where the price cut was as high as rupees 1.30 lakh, and in the percentage term, it was 27%. And if you compare with the SUV price cut, it was just in the range of 2 to 14%.
Got that. But, Sudarshan, these are, of course, one-day sales, right? And prior to that, people were also holding back on their sales in expectation the GST rate cuts are going to be announced, etc. Plus the Shraddh season. So do we have any indication of what the numbers were for the early part of September? And the question is, will this sustain?
So, that's what I'm saying. That it's the number of just first day.
Yeah.
So we have to take these numbers with big ifs. Because as of now, if you talk about the first half of FY26, numbers were largely muted. All the major segments, you take a look at PV, two-wheelers or commercial vehicles, all these segments have seen a growth just in the range of 2 to 3%. So it was largely muted. But now, after this, most of the brokerages and industry have increased their estimates for FY26. So passenger vehicle segment, earlier they used to they were expecting that growth is likely in the low single digit. But now they are saying it might be mid-single digit, or there's a possibility that it can achieve even high single digit. It's the same trend for two-wheelers. Earlier growth estimate was mid-single digit, but now they are expecting high single digit. So we'll have to wait and watch how these things pan out over the next few days.
All of this has fallen into place at the same time, right? So, Darshan, the GST rationalization, the start of the festive season. So how big has been that impact of that GST cut in terms of trying to spur demand? Because on the sector as a whole, and in case for going forward as well, what are some of the other catalysts that you're watching out for, especially because we're heading into earnings season now, so numbers will be coming out anytime soon?
That's true. So GST cut impact is huge. GST cut was done across these segments. You take a look at entry-level segment, high-end cars. So majority of the segments, so I'll say up to 80% of the segment, the bracket, tax slab bracket was reduced to 18% from the earlier level of 28%. One segment, that is the high-end car segment, where the tax slab, basically it's increased, that most high-end car, it would fall in 40% slab. But effective tax rate for that segment also comes down. So it's positive for across the segments. And apart from GST cut, there are other catalysts also. Income tax cut was announced, and very soon we are going to see the implementation of 8th pay commission. That also will be positive for the sector.
Okay, and a quick word on how the stocks have fared?
Well, so if you take a look from January to August 14, whatever the returns these companies or the auto index had given, now in the last 1 month or say since August 15, these companies and the index have either given returns of more than those levels or almost of the similar trend. Also, on the valuation front, if you take a look of the auto index, currently it's the valuation is 30 times versus 5-year average of 45 times. So I won't be surprised if there is a further up move that we see all the auto names.
Valuation, comfort, they have big tech in the US, we have big auto over here. We have big auto, all of them, Maruti, M&M, Hyundai, trading at or near record high levels. Sudarshan, thank you for that comprehensive roundup of the auto sales figures for the first day of Navratri, of course, and of course the road ahead for the sector as well. We'll take a short break here on Trading Hour, and as promised on the other side, Paul Uren joins in to discuss the top M&A deals, the PE promoter exits, and a lot more on the other side. Stay tuned. Welcome back from the sidelines of the 10th JP Morgan Annual India Conference. Nimesh is now joined by Paul Uren, the head of investment banking Asia Pacific at JP Morgan. Nimesh, take it away.
Well, Armaz, we all know that there is so much happening in terms of M&A deals, fundraising, PE exits and everything. So I'm joined now by Paul Uren. Paul, you head the Asia Pacific investment banking at JP Morgan. Generally investment bankers are in a hot seat of late. What's keeping you busy at JP Morgan across Asia Pacific? What's the kind of trend that you're witnessing across fundraising and M&A?
Sure, Nimesh. Well, look, let me start by saying it's great to be here. Every time I come to India, I get more and more excited about the energy, the passion, the entrepreneurial spirit, and it's really great to be here in Mumbai for the 10th JP Morgan India Summit and see the corporate engagement and the investor engagement here. Across the Asia Pacific business for us, it's a year that really has exceeded our expectations that we had at the start of the year. And certainly when we went through some of the challenges around the introduction of tariffs in early April, it was quite difficult to be optimistic about what that may mean for deal-making activity. What we've obviously seen subsequent to that is a lot of corporates deciding that they have to get on and execute on their strategic agendas. So we've seen a lot of companies decide to access the capital markets, both ECM and DCM, and we've also seen a lot of our corporate clients execute on their M&A agenda, as well as our private equity clients. So it's actually turned out to be quite a positive year.
So Paul, has India topped the chart for JPM as well in terms of fundraising, in terms of M&A deals for this year?
Yeah, so look, India's become a very, very important market for the APAC investment banking.
Has that surprised you?
No, it hasn't.
Really.
I think those long-term structural trends that we've all observed in India over a number of years have obviously continued, and I think will continue and indeed will accelerate. So the investment in infrastructure, the policy support, the desire for global investors to have exposure to India, all of those things have been very positive, and I think they're going to continue for some time. That being said, in the short term, clearly investors and corporates will be a little cautious. There are a number of issues to work through, but in the long run, we're very, very optimistic about those structural drivers.
Well, you've been doing investment banking for many years now, and you spoke about a couple of headwinds for Asia Pac, for global as well, the tariff issues, the geopolitical risk and all. In this kind of an uncertain environment, you see more M&A activity or more fundraising happening, or it's a bit subdued from a global client perspective?
Yeah. So ordinarily, when volatility or uncertainty is high, boards of directors tend to be somewhat cautious and find a reason not to do things. I think what we've seen, certainly over the last quarter or two, is that clients are deciding we have to get on and execute on our strategic agenda. So if there's a transaction that's compelling, whether it's divesting something that's non-core so that they can reinvest in areas they need to invest in, or if it's investing in certain countries or industries that are going to strengthen their business and deliver improved returns on equity, corporates are getting on and doing it. And I think that's a really positive sign for the markets.
Paul, the one big trend as far as India is concerned has been the outbound M&A deals this year. We've already seen $12 billion of deals. Some mega acquisitions been announced. Tega announced a very large $1.5 billion acquisition. Tata Motors went ahead and bought an Italian company. Is this only India-specific phenomenon of outbound deals? Or are you seeing this across Asia Pacific and there is a lot of hunger to buy out big assets?
Yeah, we're seeing it across Asia Pacific, but what I would say specifically about India is that Indian corporates are very well placed to pursue an outbound M&A agenda. If you think about valuation multiples in the Indian market, there are a lot of companies that are trading at fairly attractive valuations, and there are a lot of companies that have very strong balance sheets. So the credibility that Indian corporates have as acquirers into other markets, I think, is very high at the moment, and we expect that trend to continue.
Is the access to liquidity also, given a bit of confidence to a lot of the Indian corporates to go out and adventurers do some large transactions? Is that
one of the great things about the development of the Indian capital markets, and this has happened in a relatively short period of time, is that the breadth and liquidity of the equity market here has expanded meaningfully in the last 2 or 3 years. So the ability to raise very large quantums of capital, both in IPOs and follow-ons, but also the ability to execute block trades of scale in a very efficient way, I think is a really positive development for India.
Sure. What about inbound deals, Paul? Because I know that JP Morgan has been involved in some large transactions in India as well in terms of inbound money. Any specific sectors that you think there is a lot of potential M&A likely? Because we saw a very large, Japanese bank getting into the banking sector in India. What are the sectors that you think there's going to be large potential?
Yeah, so one of our objectives is to support our clients all around the world as they continue to build their businesses. And we also support our local clients as they build their businesses both domestically and also internationally. When we look at that theme as it relates to inbound M&A into India, a lot of our clients across industries, including technology, financial services, the banks, the insurers, healthcare, consumer, and other industries, are very attracted to this market. Obviously, there are long-term structural tailwinds for the market. There's the rising middle class. There's a lot of very positive consumption themes. There's also a government that's supportive of growth. And so for a lot of companies that don't have a presence in India, this is a very important market to try and get access to. So while some of the metrics may look like there hasn't been that much activity that's happened yet in India, we're talking to a lot of clients globally about ways that they can expand their presence in India. I expect that you'll see a lot more transactions announced soon.
There is a lot of interest in expanding presence in India, getting access to India's growth market. This is a very interesting conversation, but we need to get into a break because on the other side is also another interesting conversation where Gartner joins in, and they're predicting that AI spending globally, worldwide, will hit $1.5 trillion this year and scale up to $2 trillion next year. Welcome back. Now, according to IT research and advisory firm Gartner, global spending on artificial intelligence is all set to reach $1.5 trillion this year and inch up to $2 trillion next year. John David Lovelock, Distinguished Vice President Analyst at Gartner, is here with the details of this report. Thank you very much, John, for joining in. So first, if you could just give us the big picture behind this report, how have you arrived at these numbers? And what's driving this kind of growth and interest?
Good morning. Thank you for having me. Yes, it is a fascinating market. AI is taking off so quickly. It is getting into every piece of the technology market. And, most people are very much focused on the server market as being the driver here. And although it is the largest single market that we are tracking, it's not in fact the driver. It only represents about 300 billion of the $1.5 trillion of spending. Software, services, mobile phones, PCs, tablets, laptops are all being part of this amazingly growing market.
So can you give a breakup of this $1.5 trillion? How much will come from servers? What's the pecking order in terms of contribution? And then if you could get to the growth in these individual segments.
Sure. The leader right now is the server market. Our AI optimized server forecast is about $267 billion this year. It is the largest market this year. It's the largest market next year. But by the time we get to 2029, it actually subsumes to fifth. IT services up at 282 is a very strong market, and it remains strong throughout the forecast. It bobbles between the top market and the second market most of the way. We have the devices coming in at 298. And again, this is about the smartphones that are getting the NPU, TPU chips included in them so that they are ready to run AI locally when a model becomes available. We also have the semiconductors that are being bought to create all of the mobile phones, all of the servers, all the piece parts that we need to actually run the models. The models themselves are actually a very modest part of the market. It's only $14.2 billion this year, raising up to $75 billion by 2029. So while it is sort of the centerpiece of the story and where most of the work happens, it won't necessarily be the part of the market that is the most easy to monetize.
John, good morning. Thank you for joining in. The growth bit is now known, right? With billions and almost now potentially even trillions being poured into AI for the growth of the sector. But how does that come back? Because there have been certain reports that have been questioning or raising alarms over a potential revenue shortfall. So eventually, when the AI monetization does start to happen, do you believe that this is going to be an extremely long gestation period for these investments to start paying off eventually?
I think there is a mismatch between where people are expecting the money to come in that payoff. We're already seeing, as an example, that the AI models themselves may not have the $1 trillion of income that has been speculated that is required to pay off the servers that are being purchased and the data centers that are being built. But it must be remembered that every piece of software will have AI embedded in it. Part of the price that you pay for software will be for that AI engine. That AI engine will get paid for from the software providers, not necessarily directly from the clients consuming them. Consumers will do their usual thing. They will be consuming AI and they will be paying for it in different means. So in some cases, AI is actually going to be the model underneath where the money is being made, not necessarily directly in line of sight to that revenue. And we're also going to have the regular sort of third-party payment situation when it comes to technology, particularly in the consumer space, where we'll be paying for it with ads and with the attention-based economy that we have.
In which segment do Indian IT companies fit in, if at all?
The IT company or the service companies fit in the AI services area. And again, there's a bit of a back and forth with them, unfortunately. There is money that they're making providing out technology consulting around artificial intelligence, business consulting around artificial intelligence, and there are managed services coming online that are specifically for building models, maintaining models, ensuring that your generative AI models are running correctly. So the managed services component. But this is also the first time where services companies will actually start using this technology themselves in their delivery. So I may be getting business consulting done, but they're going to be using artificial intelligence to aid in the delivery of that service. So in the services world, it's also being served up as much as it is being part of the contract that is being delivered.
John, pleasure having you today. Thank you so much for these interesting insights, and looking forward to you sharing more such insights on our platform more often. John David Lovelock there of Gartner. We take your leave on this edition of Trading Hour, but just before we do that, just pull up the rupee. It's made a new low just a few minutes earlier. It's set for its biggest single day fall in a month now. 88.74 is where the currency stands now, and it's a new record low that the rupee has made in comparison to the US dollar. So a new low for the currency. The markets slightly recovered from the lows of the day. 25,120 is where the index currently stands. We take your leave from Rima and me. Thank you for watching. Halftime Report takes the action forward.